All right, let's talk about a literal seismic shift in the tech world. If you use a smart home device, industrial IoT equipment, or honestly, virtually anything that connects wirelessly, the landscape of how those devices are powered just fundamentally changed. We're breaking down the anatomy of a massive semiconductor buyout today, and the ripple effects are huge. In this explainer, we're going to walk through exactly why Texas Instruments is acquiring Silicon Labs, the financials driving the decision, and what it all means for the future of connected devices. Okay, let's dive right into this. $7.5 billion. That is the staggering enterprise value of this acquisition. In the semiconductor industry, deals of this magnitude absolutely do not just happen on a whim. They're calculated, strategic master strokes designed to completely reshape the market. So we're going to explore exactly how Texas Instruments plans to make that massive investment pay off. Here's our roadmap for today. First, we'll look at the $7.5 billion deal itself. Second, we'll step inside Silicon Labs' Q1 performance. Third, we'll break down the strategic synergies. And finally, we'll look at the future of connectivity. Let's get right to it. Part 1, the $7.5 billion deal. So, the definitive agreement is officially signed. Texas Instruments, the Dallas-based giant known for its incredibly broad portfolio of analog and embedded processing chips, is buying Silicon Labs. Silicon Labs, headquartered just down the road in Austin, has really carved out a massive niche as a leader in secure, intelligent wireless technology. It's a classic case of massive scale meeting highly specialized expertise. Now, what's really interesting here is the financial leverage. Texas Instruments is bringing an all-cash offer of $231 per share to the table. Compare that to Silicon Labs' recent trading context, which was hovering around $216.89 in extended trading right around their Q1 reports, and you see a very deliberate, confident premium. And since it's an all-cash transaction, TI is essentially flexing its formidable balance sheet and debt financing to swallow this up without diluting its own stock one bit. Moving on to Part 2, inside Silicon Labs Q1. Right before this acquisition announcement, Silicon Labs Q1 painted a fascinating, honestly kind of mixed picture. On the highly positive side, they posted Q1 revenue of $213.5 million. That's a massive 20.1% jump year over year. They also saw an acceleration in bookings and a decline in distributor inventory, which literally means their products are flying off the shelves faster. But it hasn't all been smooth sailing. Thanks to the recent downturn in the broader semiconductor industry, they've actually accumulated multi-year pre-tax losses, forcing them to establish a valuation allowance on their deferred tax assets. So you've got a company with explosive top-line growth and demand, but one that has definitely struggled with recent bottom-line profitability. And to really put that demand into perspective, we have to talk about their book-to-bill ratio, which just hit a multi-year high. For a quick refresher, the book-to-bill ratio basically compares the value of new orders a company receives to the value of products it actually ships and bills for. A ratio above 1 means more orders are coming in than going out. It's a massive, flashing green light for future growth. Matt Johnson, the CEO of Silicon Labs, hit the nail on the head regarding their trajectory. He pointed out their decade of double-digit growth driven entirely by the demand for connected devices. They've literally just had 2 quarters of record design wins. The takeaway here? Texas Instruments isn't buying a struggling company at all. They are buying a highly innovative growth engine that probably just lacked the raw manufacturing scale to maximize its profitability during industry downturns. Part 3, the strategic synergies. The absolute core logic of this deal comes down to the manufacturing model. Silicon Labs is what we call a fabless semiconductor company. That means they design the brilliant chips, but outsource the actual physical manufacturing to external foundries. Now, when supply chains get tight, that becomes a huge vulnerability. Texas Instruments, on the other hand, they are a total manufacturing powerhouse. They own massive 300mm wafer fabs right in the US, along with complete in-house assembly and test capabilities. When you combine these two completely different models, the financial math gets really exciting. By taking Silicon Labs' 1,200+ wireless products and moving their manufacturing into TI's internal fabs, essentially reshoring them to the US, they completely cut out the middleman. Add in the ability for TI's massive global sales force to cross-sell these new wireless chips to their existing customer base, and the combined company is expecting to generate roughly $450 million in annual manufacturing and operational synergies within just 3 years. But it's not just about saving money, it's about technological harmony. Texas Instruments' defined process technologies, especially their 28nm nodes, are basically perfectly optimized for the exact kind of wireless connectivity chips Silicon Labs makes. By bringing all of this in-house, TI can offer customers something Silicon Labs simply couldn't guarantee on its own: a completely dependable, low-cost, global supply at massive scale, completely shielded from the wild volatility of third-party foundries. Part 4. The future of connectivity. Now, a deal of this massive scale definitely doesn't happen overnight. The definitive agreement was signed in February 2026. Right now, and likely through the rest of the year, they're busy navigating the complex web of regulatory approvals and securing the official vote from Silicon Labs stockholders. If everything goes according to plan, they expect the transaction to officially close in the first half of 2027. So we won't actually see the fully combined entity operating as one unified machine until next year. Texas Instruments CEO Haviv Elon stated that this acquisition is a significant milestone that strengthens their long-term embedded processing strategy. And really, that's the ultimate takeaway here. Every single day, more and more devices are getting connected to the internet. From your smart thermostat at home to complex factory floor sensors, the demand for embedded wireless tech is going in exactly one direction: up. TI saw a true leader in that space, realized they had the factories to make those chips cheaper and way more reliably, and they made their move. So what does this all mean for the industry? By combining industry-leading wireless design with absolutely unmatched in-house manufacturing scale, will this $7.5 billion mega merger make Texas Instruments the absolute undisputed king of embedded wireless? Well, only time and execution over the next few years will tell. Thank you so much for joining me for this explainer. Definitely keep an eye on this space because the ripple effects of this deal are going to be felt across the tech world for a long, long time.